welcome back to my channel. So today's video is just a trading recap on a play I took on QQQ this morning. I caught a $26 move in 24 minutes based upon the recognition of a bull flag that formed during pre-market. Now this was a pretty clean trade on a familiar pattern. Y'all have seen me trade using this one setup I trust over and over. I've shown this on Tesla before that a pre-market bull flag tends to be followed by a strong breakout. So let me walk you through how I saw it, why I entered when I did, and how I knew it was time to take profit. So no guessing, no hoping, just straight price action execution. So to start, we'll go ahead and take a look here at pre-market. At around 7:46 a.m. here, I saw this clean move from about 4:09 to about 4:15 to the upside, and this served as the flag pole. What came next? The classic sideways consolidation. You'll notice it's tight, controlled with low volume. So let me show y'all what I'm talking about. I'm going to pull up the drawing tools here, and I'm going to show y'all within a trend line. We're going to show you here to here. This is exactly what I saw as far as staying within this channel, and we're only going to draw it for the end of pre-market so y'all can see exactly my analysis. And then the flagpole was here from about 7:46 to about 7:54 here. So y'all can see QQQ trading within this channel here to the downside. Now watching for the breakout is where patience comes into play. Now here's the key. Most people jump in too early. Me personally, I waited for confirmation. So I waited for the channel to finish forming. So I did not enter into this trade at the start of the market when it opened. I waited to see where it would bottom out as far as ending the channel. So let me go ahead and zoom in so y'all can see exactly what I'm talking about. Alright, so now you can clearly see that the channel had not ended just because the market opened. The candles continued to descend in this channel until about 8:42. So for me, I just was patient and waited to see what it would do as far as the reversal and the breakout to the upside. So I like to always recommend waiting for the third level of confirmation, being that third candle. So I didn't enter here at 8:44, I waited until 8:48 on this candle right here. So this third bullish candle here came right after the breakout, and I entered at about 4:08 for the price level. Now you may be asking yourself, why the third candle? Because in this instance, I wanted buyers to stick around, not just show up for the hype. Now combining this bullish sentiment here for the third candle with the EMA alignment, you can see that the EMAs were getting close to crossing. They hadn't fully crossed and intersected just yet, but both the 9 and the 21 EMAs were getting close to that intersection. It was obvious that it was inevitable. So that's what I call momentum agreement. And all that is when price action and key indicators are aligned in the same direction, and that's where the real edge shows up. You can lean heavily on VWAP for this. When price is holding above VWAP, pulling back cleanly, and buyers keep stepping in on volume, that's momentum confirming. It tells you institutions are supporting the move, not just retail chasing. And you can pair that with a rising ADX to confirm strength. So if the breakout is happening above VWAP with solid volume and trend strength backing it, that's momentum agreement. That's when I'm not hesitating, I'm locking in my entry, managing tight, and letting the market work for me. It's not just about jumping in because something is moving, it's about recognizing when everything is syncing up and the probability is in your favor. That's what gives a trade real conviction. Now, if you're a new trader, the two easier elements are price structure and EMA alignment. When the 9 EMA crosses above the 21 and price is making higher highs with volume maintaining, that's also momentum confirming itself as well. It means buyers aren't just reacting, they're committing. On top of that, I'll check the candle's body and wicks to confirm the strength behind the move. If everything's aligned, price structure, EMAs, and a rising ADX above 25, then you got momentum agreement. That's when you hold longer, size up, or trail with confidence. So yeah, it's just about stacking confirmation. That's how you trade momentum with purpose, not emotion. Now in reference to the ADX down here, y'all know I always have it pulled up on my chart. It was rising fairly strongly, and we can see that it was beginning to reach a higher level of momentum. Anything above 25 confirms the trend strength, and it pushed towards that direction right after my entry. So I stayed in the trade while it was pushing to the upside, no reason to panic at all. I watched the volume stay steady as well, you can see it here. And the EMAs, although not fully needed, they did serve as a guide for the hold. Once I saw the price stretch into the 430s to the upside here, I knew it was near an exhaustion level. So I exited this trade at 9:12 a.m. at the price level of a 434, and I took profit. A pretty solid and clean move for $26 in 24 minutes. No need to complain. Now, ideally, it would have been nice to ride this to the day's high, but having that mindset can cost you money. So I was more than good with the exit and being very intentional. Now, I will say this consolidation zone here from about 9 a.m. to 9:10 did cut into profits. However, I did decide to trade through the pullback with this simply because there weren't enough signs that this would be a reversal to the downside. So the sell-off was not confirmed in any way, shape, or form with this. So for the most part, here's the game plan that worked. I spotted the pre-market flag here. I waited for the breakout confirmation by letting the flag fully form. I entered just slightly before the EMA alignment with the crossover of the 9 and the 21, that in combination with the ADX rising to the upside as well, and then also maintaining awareness of the volume and how it remains steady. So allowing the volume to guide the hold was pretty much the game plan in any situation. And then the last thing to keep in mind is that I exited before the exhaustion wick showed up, simply because once the stock started to tap into this supply zone, I knew that there would be a sell-off to follow. And I've talked to y'all about that before. When a stock taps into a supply zone, that's an alert for awareness. A supply zone means sellers have history there. It's where smart money previously released size, and when price comes back to that area, it's necessary to recognize what's likely to happen. So it's not so much about projecting the exact moment of the reversal, it's about being aware that the character of the trade can shift very fast. So if you take away nothing else, just remember to treat supply zones like exit ramps. Me personally, if I'm in a long trade like this one and price pushes into one, I tighten up, manage expectations, and protect the bag. Because the emotional traders may get caught chasing breakouts right into the hands of sellers. But when you're aware of supply, you act from control, not confusion. That's what keeps your wins intact and your confidence sharp. So all in all, y'all, you don't need 10 plus indicators. You don't need a whole ton of different information pulled up on your charts. Just structure, read price action, stay patient, and be confident in your setup. That's exactly the formula to how you get these kind of wins without stress. So I mentioned that to say that you don't have to overcomplicate these types of trades, but you don't want to oversimplify them either. And what I mean by that is, although this is a fairly easy setup to identify, if I had entered into this trade at the start of the market, I would have mistimed the entry completely, simply because the flag's channel formation was not completed until about 12 minutes into the open, hence why confluence is so important. So I'm not saying that you can't trade these types of setups and start at the market, because as mentioned, y'all have seen me take trades on Tesla with this same pattern, but the difference is prior to taking those trades, I analyzed what was influencing price action based on market makers' decision making. And a huge part of that is the gamma exposure, known as the GEX, and I'll have a video covering that topic very soon. Now, real quick, I also want to show you SPY because it actually showed the same level of conviction this morning with the same pattern. So I'm going to zoom it in here. Y'all can see I already have drawn the pattern. So you can see the flagpole here, and you can see it also traded within the channel to the downside. It stayed within that channel at the market open, and then we saw the breakout here at about 846. So same structure, same rules apply. We can see that this pattern showed a lot of conviction to the upside as well, and you can see that SPY reached the ultimate high of 523 for the day. So my whole point in showing this is that when you see these types of setups, it's important to know that there's a positive correlation that is likely impacted by the same market force or the assets are in the same industry. Now, if you can identify if the securities move in relation to each other, you can better plan your trades. And you'll see this similarly with stocks like Nvidia and AMD, or even within stocks and ETFs in the same sector. For example, the Vanguard ETF nearly moves identical to SPY with just different expense ratios. Or you may see QQQ and XLK move in conjunction. Along with that, in reference to the patterns, the market is very repetitive, so it will repeat itself over and over again. And these patterns and these setups tend to be pretty simplistic. And once you become familiar with them, it's like second nature when you trade them. So yeah, y'all, I hope this helped you see how I approach high conviction setups. So feel free to let me know if it was useful. I post trades like this just to show you it's possible to win with structure and strategy, and just to show you how you can take the guesswork out of trading. Because if you find trade setups that make sense to you and how you strategize, go ahead and stick to that. If you need to trade the same setup a multitude of times, there's nothing wrong with doing that so long as you're profitable and it makes sense for your own trading technique. So yeah, y'all, this was just a quick recap on what I took this morning on QQQ and how it was in alignment with SPY. And just a breakdown of my logic on why I chose to take this trade. And y'all can see here that SPY showed the same similar setup. So again, just the market repeating itself over and over is just one of the things that makes it easier to project. And the more comfortable you get with trading, the easier these things become to spot. So you pretty much essentially just remove the guesswork altogether. So yeah, y'all, that'll pretty much do it for this video. If you found this information to be helpful, feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.